Good evening, everyone. This is Dana from NexGen, and welcome to Me Inc. I hope everyone is having a good Friday, and thank you for stopping by. Today in Me Inc., I would like to talk about taxes. Now, normally taxes would be due April 15th. And so, what I'd like to do is give you a little history about why we pay taxes. And I'm talking about taxes in the United States. So, why we pay taxes, the different tax types, how the government spends our money that they get from our taxes. And in the description below, I actually have a link to the fiscal year 2022 budget, and it basically outlines how they intend to spend our tax dollars. And of course, this is at the federal level. Each state would publish for public view how they are going to spend the tax dollars that they receive from us. Individual income taxes has been the primary source of revenue for the U.S. federal government since 1950. Now, whenever we talk about the government paying something, we're basically talking about the money that they receive from the individual income tax. So with the payroll taxes, and that's used to fund social programs like Social Security and Medicare, income taxes are a little bit about 80% of all federal revenue. And this is the money that they use to run the federal government. And of course, it wasn't always that way. The history of income taxes in the United States goes back to the Civil War. And Abraham Lincoln had signed into law the nation's first ever tax on personal income. And he did this to help pay for the war, the Union effort in the war. It was repealed 10 years later, and Congress tried in 1894 to enact a flat rate federal income tax. But the United States Supreme Court ruled that the tax was unconstitutional the following year because it didn't take into account the population of each state. And then in 1909, Congress passed the 16th Amendment, which allows the federal government to tax individual personal income regardless of the state population. The required number of states ratified the amendment in 1913, and Americans have been required to pay federal income taxes since that time. So again, it wasn't always that way. Now, there are some, by law, there are Americans that would be required to pay taxes, and that's dependent upon their gross income or if they earned it through self-employment. So if you go to the irs.gov website, it actually outlines who would be required to file and pay federal income taxes. Now, one of the things I found out was very interesting was that in Puerto Rico, now Puerto Rico is a U.S. territory, residents are not required to pay federal income tax if their income is the only source, if their income came from within Puerto Rico. Now, this is at the time of my recording, but they do pay Social Security, Medicare, import, export, and commodity taxes. So you've got the U.S. territory of Puerto Rico, and then we also have some states that don't pay taxes. So you've got your federal taxes, and you also have your state income taxes. But I will talk about the different types of taxes in a minute. But there's different ways that the federal income taxes are calculated, and it's designed to be progressive, which means the more taxable income you have, the more you'll be paying. And then if you pay more than is required, then the IRS will give you your money back in the form of a refund. So basically, that's the history of the U.S. tax system. It wasn't always that way, and it wasn't always based on our income. Okay, as I said before, there are about 3 different types of taxes. And so there are taxes on what you earn. There are taxes on what you buy. And there are also taxes on things you own. So I'll go ahead and give you some examples of each one of these. So for example, taxes on what you earn, we go back to the individual income tax. So for the self-employed people, they'll be paying their taxes quarterly. And for the W-2 employees, they will be, their employer will be taking money out to pay their individual income taxes. So you've got those. Then you have what they call the corporate income taxes. And the corporate income taxes is levied by the federal and state governments on business profits. So then, of course, you have the payroll taxes. Then you have the capital gains taxes. Now, we're familiar with the payroll taxes because that's what you will see on your pay stub if you're a W-2 employee. But a capital gains tax could be taxes if you sell a share of stock, if you sell real estate. For example, if you sell your house or you sell a house, you will get capital gains. Also, if you sell a part or all of your business, those are all examples of capital gains. Then we have taxes on what we buy. For example, if you bought a car, you will see that there's a line for paying taxes. So you'll pay taxes on what you purchase. In the state of Maryland, where I live, we don't pay taxes on food. Now, we may be paying taxes on prepared food, but we don't pay taxes on food. So, and of course, in Delaware, they don't have a sales tax. So those are the different types of taxes on what you buy. Then you have the gross receipts taxes, and that's applied to a company's gross sale, and that's regardless of profitability and without deductions for business expenses. So, of course, that's gross receipts. That's before the deductions. Then we have what they call a value added tax, and that's a consumption tax that's assessed on the value added on each production stage of a good or service. Then we have excise taxes, and excise taxes are taxes imposed on a specific good or activity, usually in addition to a broad consumption tax, and it's made up of small and volatile shares of a total tax collection. Now, examples of excise taxes are cigarettes, alcohol, gasoline, and bedding. So those are examples of excise taxes. Then we have taxes on things that we own. For example, property taxes. So we talked about property taxes in previous Me Inc. videos where, for example, if you have a mortgage and you have what they call escrow, and the escrow is comprised of not only the homeowner's insurance, but also the real estate taxes. So that's an example of the property taxes that you would pay. Another one is if you own the property outright or you're responsible for the taxes, you would pay that separately. So every year we would receive a tax bill on our property. Then we have what they call tangible personal property taxes. And the tangible personal property tax is property that can be moved or touched, such as business equipment, machinery, inventory, furniture, or automobiles. So we do have those types of taxes. Then we have the inheritance or estate taxes. So depending on the value of the person's individual property at the time of their death, then they could be assessed inheritance or estate taxes. Now, you also have what they call gift taxes, and gift taxes is set at a certain amount. So if you're giving someone a gift, you may have to pay what they call a gift tax, and the amount changes every year. Then, last but not least, we have the wealth tax. And wealth taxes are typically imposed annually on an individual's net worth. And remember, we talked about the net worth in our previous Me Inc. videos, where our total assets minus any debts owed or liability. And this is imposed above a certain threshold. Now, in the United States, we don't have a wealth tax. And they do have countries that do impose the wealth tax, but they're rethinking that because they found that it's difficult to administer. It doesn't raise a lot of revenue, and it can have harmful effects on the economy. and it also discourages entrepreneurship and innovation. So if you think about it, why would you work hard to increase your wealth or your net worth just to have it taken by the government? And of course, that is just my personal opinion on that. So now that we've talked a little bit about the history of taxes and why we pay them, and then we talk about we just talked about the different types of taxes. Now we're going to go into what the government, in the different ways the government would spend our tax money. Now, as I said before, I've included a link in the description below on the budget for 2022, fiscal year 2022. And basically that shows how the government intends to spend our tax money. But there are different ways that I would like to outline that they do, that the government spends our tax money. So when they say the government's going to pay this and the government's going to pay that, or the government should pay this or the government should pay that, they're really talking about the taxpayers. And so some of the programs that they pay, of course, one is the health programs, and that our taxes would go to fund health programs like Medicaid, Medicare, Children's Health Insurance Program, and other general health initiatives. Now, this accounted for 28% of last year's federal budget. So that's a nice chunk right there. Another way that they use our tax dollars is for national defense or security related programs. So it's used to fund the Department of Defense and the cost of international military programs. Thank you very much. Also, taxes are used to pay Social Security. And in 2016, over 60 million Americans received Social Security benefits. And what do we mean by benefits? And these are the beneficiaries. These are the categories. They include retired workers, surviving children and spouses of deceased workers, and disabled workers. So that's the category of Social Security. Then we have the 22 million veterans in the United States that our income taxes would go to help cover their pensions, medical care, education and disability payments, and the operations of VA medical facilities and clinics. So you have the military, which is the national defense, and then you also have the tax money going to veterans benefits. Thank you very much. Then we have the food and agricultural benefits, and you may know them as SNAP, which is the Supplemental Nutrition Assistance Program, the National School Lunch Program, and the Federal Crop Insurance. So it goes to paying for food and agricultural benefits. Then we have the educational programs. So they could be the Pell Grants, the work study programs, student aid in elementary and secondary education initiatives. So it is used to pay for educational programs. Then we have some others that are unemployment and labor programs, like the Temporary Assistance for Needy Families, retirement and disability benefits for federal employees. Thank you very much. The U.S. Customs and Border Protection and the operation of federal prison systems, the housing assistance and community development programs. So those are some of the things that the federal government uses our taxpayer dollars for. Now, another one, the last but not least, that it pays for all of these things. In addition, we also pay for the interest on the national debt. So we're not paying everything outright. We actually have over $30 million in debt, and we're also paying for the interest on that debt. Last year, the interest payments claimed about 6% of the federal budget. So out of all the money that is in the budget that I have linked below, 6% is going towards the interest on the national debt. Hopefully this information was beneficial, and you were saying, Dana, why did you choose today, this beautiful Good Friday, to talk about taxes? Well, normally we would have to file our income taxes April 15th. Now, you can ask for an extension, I think it's about 6 months, to prepare your taxes. You can ask for an extension, and you normally want to do that before April 15th. Now, that does not mean that if you know you owe taxes, that gives you an extension to pay. They're still requiring us to pay our taxes, at least the estimated amount, on or before the 15th of April. So, again, it used to be, it was normally going to be April 15th, but this year it's April 18th. And you say, well, why the 18th? Because April 15th is a Friday. It's a weekday. So back in 1913, we're going to go back to history a little bit. Congress selected March 1st as the official date for paying taxes. And then a few years later, it was moved to March 15th. So it was March 1st in 1913. And then they moved it to March 15th. And I could not tell you why. And then in 1955, another tax overhaul pushed back the deadline an entire month to April 15th, giving the government more time to hold on to tax dollars before paying any refunds that it might owe. So keep in mind, a lot of the reasons why dates are moved is not always to our benefit, my personal opinion. So it was moved to April 15th. So if April 15th falls on a Saturday, Sunday, or a holiday, the tax day becomes the first succeeding business day after that date. So April 15th this year does not fall on a Saturday or a Sunday, but it does fall on a holiday. It just happens to be a Washington District of Columbia holiday. And I think it's called Emancipation Day. Isn't that ironic? So now the tax will be due April 18th. So again, I hope this information was beneficial to you, and additional information will be in the description below. So have a great Good Friday, and I will talk to you next week.
Make sure to like and subscribe and hit the notification bell so you can never miss another video.